in my workout in this 20-day challenge. I just want to push myself and see how far I can go in terms of just working out and staying in shape. So today the gym is busy, so I'm just gonna be working on this. Oh, okay. I'm gonna go on the treadmill. It's okay. I'm gonna take a yeah. I'm gonna take a bit. Okay. So yeah. Okay. So I'm just gonna go on the treadmill for about 20 minutes of workout, and then after that I'm gonna out on my legs. It feels like it's Friday somehow. I guess it's because I'm super tired. I started this Monday. It's not easy to work out 5 days a week. So I'm just gonna try and push 20 minutes here and then see. Okay. So okay, I have to start this. I don't know why this is not working. Just stop and start again. Okay. So I'm gonna start the workout. Okay, perfect. I had to restart. Okay, so hang out with me, and as I'm gonna be working out, I'm gonna be just sharing with you guys some of the things that I have been observing in the market. Some of you know that I trade in the stock market, and today it was wild. I can tell you guys, it was wild. Nvidia reported earnings yesterday, and they had a blowout revenue beats, whatever metrics that you can think of. And the GPUs, they are sold out until 2026. So, despite that, the stock went up early in the morning and then later on started dropping. I'm trying not to take other people as I'm working out. Okay, I think this is better. Yeah, so that's it. I guess the other thing that I'm gonna say for some of you guys who may be first time watching this is a challenge that I took myself for myself. I realized that I was just, being lazy, not working out. So I decided to go and hit the gym. So I started this. Today, this is day 7. So since I started, I realized that it's not easy to push yourself, but then the way that I try to invest and spread, make sure you follow me here, you subscribe, you learn more. The same way that I do my trading and my investing is about the mindset as well. You really have to understand the psychology. So in the process, I also have to do the same to take care of my body, regardless of it being painful. I had to push myself, right? So that's what I do. It's not easy, but at first it was really painful, but now it's getting better. And I'm gonna be doing this at least Monday to Friday continuously and see how far I can go. So make sure whatever I say here, financial stocks, it's not supposed to be taken as investment advice. Investing comes with risk, especially if you're trading options like I do. So make sure you do your research. If you want to learn more, you can visit my website www.streetwise.com and we can talk more because before you invest your money, you really have to understand a few things Most importantly, what you want to invest in, your risk tolerance. Make sure you don't invest money that you want to use in the short term. So that means you should build an emergent fund. And Ninja experts believe that you should have at least 6 living experiment. So that's something to have in mind. That's why I always want to do things that you're comfortable with. So hang out with me, subscribe, follow me on social media, and make sure that you ask me any questions that you want me to talk about in the comments or as I do this workout. I have a video that I was actually editing. I'm gonna be posting it tonight at 9 p.m. Standard Time. Basically, edit the money into my trading account and I do an analysis of what the NVIDIA earnings means. You know, for those who trade in the market, you know that the market really went up after NVIDIA reported blockbuster earnings. And in the morning, when the US markets opened, the equities markets, it was really up. But 10 minutes into the open, market open, it sold off. Why? So those are some of the things. I think there was profit taking. And market makers, what they do is, I guess, the psychology is, if I'm an investor, and I shared this yesterday, I don't want to be chasing stocks when they are at all-time high. I don't. You have a very big chance that you're going to lose money. So imagine if you got in when the stock went to 195, or at some point I think it went to 205. So it pulls back to 180. That's it. If you cut your losses, that's a huge loss. So I always want to be looking at hedging stocks, high quality stocks, when they are really oversold, not when they are overbought. That means when they are really at the bottom of the Bollinger Bands. And in so doing, I minimize my risk. I do research. The stocks have to have a very strong balance sheet. So those are the things that I teach here on Streetwise Economics YouTube channel and through my social media. I write for newspapers, the Standard from Zimbabwe. So I basically document what I'm doing, the mistakes, the wins that I make, and in the process of inspire you guys to build wealth. Having money from what I'm learning, it gives you the freedom to not rely on someone else, whether it's an employer or the government to an extent. The government can still always be the big brother, checks this, all these other things that they hate to do. At least you have a modicum of flexibility to choose to spend time with family if you want to work out. But it's a process. A lot of people I've seen, a lot of students that I coach through the Streetwise Economics coaching program. You can check out on my website, www.streetwiseeconomics. They lose money. They used to lose money because they want to get rich quick. If 80% or so of professional investors, I'm talking of the hedge funds, angels fund, and all these people with a lot of money, if 80% of them or more cannot beat the S&P 500, which has been retaining 20% annual return. So think of it, it's extremely difficult to beat the market. And the market 500, which is a basket of 500 companies that come from different sectors in the US. Technology sector, I think, is over 30% weighting, real estate, energy, and all other sectors, consumer goods, consumer staples. But at the end of the day, 10% per year. But some years, the S&P 500, if you look at the data from 1928 or 1923, I think it started back then. 1933, there was a lot of bloodshed, the Great Financial Depression. And along the years, there has been a lot of pullbacks. Years when the S&P 500 dropped like 40%. If you look at 1933 as an example, like 1980. So people lose money, right? So some years the market goes down, some years it goes up. But on average, if you add the up and down years, I think about 70% of the time, the S&P 500 has been going up. So if you get 10% per year, that's not bad. So it's not investment advice, but a lot of people now coming in with they think like, okay, I'm gonna make 100% in a month, or the rest is for the last for the next batch. So I teach consistent methods of making money using options. It's a good with covered goals, leaps when the odds are very good, and also understanding valuation, the management of the people who lead these organizations. If you look at Jensen Yang, for example, the CEO of NVIDIA, he's doing a fantastic job. He's doing a fantastic job. He was recently in Asia, he was in, I think, Taiwan, building linkages with Samsung and other global leaders, the supply chain. You see, he's delivering GPUs, they are sold out. But the question is NVIDIA not overvalued? I think it's fairly valid at this point. Would I be buying in now? Well, no. I would probably wait for it to drop to 170. And I do a cash secure put for probably $10 below for a month out. I get paid maybe $5. So that's $500. So for 100 shares for one contract, that's for 100 shares. So I would take probably a strike price of $60, $160. If it drops to 170, that's a $10 buffer. So if it drops further to 160, I still have the buffer. And remember, when you sell a cash secured put, you get paid, man. Let's say you get $5 per contract. That's $500 representing 100 units of shares. So effectively, my cost basis would be 165. Now, as soon as I get assigned, if it drops, let's say to 150, and I have a strike price of 160, I can sell a covered call, right? I wait for the stock to go up, and then I will sell a covered call. Let's say $5 or $10 up my cost average. So that's it. I get paid again. So if you look at it, I'm reducing my cost basis, but I'm not chasing the stock when it's at all-time high. So that's one of the strategies that I use, and it's very interesting. When you do that consistently, I realize that my performance on my portfolio is consistently beating the S&P. I was at 77% pulled back when the market dropped from about 85%, but now I added more capital in that account that I've been sharing with you guys, creating content, and the performance is down because the average I added more money, so my simple rate of return has to drop because I have more money, but the profit base has not increased. But the point is, you have to be careful when you are investing your money. Make sure you do your homework, you understand your risk tolerance, and more importantly, don't just jump in things that you don't understand. You may also be interested. I don't invest in crypto. Not that I don't understand, but I was checking crypto. It has been dropping. It wiped out all the gains it made this year to date. Remember, crypto, Bitcoin, it's going to $125, $125,000. Last time I checked, it's below $90,000, and it has been dropping. So think of it if you got in at the top, think like, okay, I'm going to get, it's going to get to 300,000. But hedge funds, big companies such as BlackRock and others, JP Morgan, all these big businesses, they understand valuation and they play a long term game. I started having good returns in my investment and trading once I started shifting my mindset from day trading to long term. Even when I do technical analysis after research on the stocks, I'm looking at the long term. I'm thinking and acting, behaving like an investor. In other words, I'm not really worried about the short term fluctuation unless things change. And by things change, I mean inside that business that I will be trading, or if I have a position, I have to decide if it's wise, prudent for me to manage risk by exiting, or most people overreact. So once I play a long term game, I'm not really stressed about, oh, the market is up today. It's down. Yes, I'm excited if I had positions. I see profit. I take the profit off the table and I wait in cash. If I see opportunities, I deploy and I repeat the process. So that's something. Enough of that. Anyway, how are you guys doing? Share on the comments what you want, but also subscribe, follow me for more exciting updates. I've been trying to stay here, guys. It's not easy, but look, some things just have to be done. Okay, like exercising. This is important for me. So I'm just gonna put some more um, make sure that it's silver a little bit. And my speed is like 4.4 kilometers per hour. I'm left with 4 minutes on the treadmill. After this, I'm gonna wait all my muscles. That has been my goal to make sure I'm fit. I look on my cardio. I can do it now. When I realized that I was not fit, it was very crazy. I was rushing to catch the bus, so I ran for about 100 meters. Can you imagine, guys? I felt like I was gonna die. That's when I was like, "Yeah, I should do something. I'm not fit." So that's when I started to come to the gym regularly. And today is day 7. I'm so excited. I'm sticking to my promise to myself that I should work out, do the best that I can every day, be a better person mentally, build the growth to my family, my friends, and to you guys. I really appreciate that you support my work by watching. Make sure you follow me, you subscribe here, you watch some of my videos. It really breaks my heart when I talk to people, friends, and sometimes people who come to me for to learn about investing. It's like people think it's very complicated. Well, I get a simple approach. Investing doesn't have to be complicated. You just have to focus on simple things like making sure you live below your means. If you have credit card debt, make sure you work hard and smartly to pay it off over time. Some people choose the snowball effect to pay one with high interest rates, like a low or the smaller one. You do what works for you. Because honestly, as an investor, I love Mastercard. Visa. If you invest in that stock, it's a good price. It's a fair value. Because if you look at the balance sheet, or their income statement, they get a lot of revenue from credit card. Think of 20% paying interest a year. Think of it the other way. If you have invested that money, you're making 20% pay. That's what Warren Buffett was doing. He was compounding money, 20%. And he has been the greatest investor ever, at least amongst the best. But he was just compounding the money 20%. Means in less than 5 years, you double the money. But think of it, you are paying MasterCard, Visa. No offense, it's your money, but I'm just sharing this to say sometimes these are some of the things that you must be careful about with your money. Don't borrow using credit card. I understand life happens, but build an emergency fund. Start giving 1,000. Build an emergency fund. Start investing in assets that generate money, cash flows. If you have a job, make sure you invest, live below your means. I have many friends who make a lot of money, but they keep very little, because they live a challenge with what we call lifestyle inflation. You make more money, you buy even more expensive stuff. At the end of the day, you are wasting. So don't be that person. Take major habits. So I'm gonna be ending this, uh, and I'm gonna be streaming live on my Facebook account, Isaac Leonard, and I will also do a short one on TikTok for my friends there. So thank you so much for being with me. Let me see who is there. Yeah, this is I have, hey, I need glasses. Sorry, I can't really see. Say hi. Okay, hi. Thank you so much for saying hello. And I I need glasses, so but thank you so much for tuning in. You guys are watching. You're amazing. Make sure you subscribe, you follow me, and you support my work, and you also stay healthy and safe as well. Thank you so much. I'm gonna hang out for now. Bye bye.